I think it was a surprise that it took so long for
Right.
10-year yields to move up. But it's always easier to explain after they go up why they did than to try and explain before they go up why they didn't.
Why did they go up?
I think that there's a widespread belief that the U.S. economy is doing pretty well. The Fed is on track to raise interest rates again in December, 3, maybe 4 times next year. And I think also as the Fed is beginning to pull back from quantitative easing, we're seeing the return to more normal term premia, the extra yield that people demand for holding long-term paper. So I think it's in this case, it's a relatively good sign. It means that there's confidence that the economy is coming back.
Would it be a good sign, and obviously it does mean that things are going pretty well, couldn't it be a good sign until we get to much higher levels that indicate that it's an inflation, a harbinger of inflation that's going to be a negative? I mean, I would think that's 3 or 4 points away before you're at that. I mean, 300 or 400 basis points away.
Well, yeah, I think you're right. There's there's 2 risks here. One is the Fed is too late, and we're going to get a surge of inflation, and then they'll have to slam on the brakes. And the other risk is that they're moving too aggressively, that with all the uncertainty in the world economy, the International Monetary Fund put out its latest forecast last night, and they shaved the growth forecast for the U.S. and the world for 2019, in part because of trade tensions. It could be that the Fed overdoes it. And that's the real tough balancing act that the Fed has now. They always have it at this time in the cycle. How much is enough and how much is not too much?
We maybe are underestimating how quickly wage pressure can grow. But once again, and you're at Brookings, given all the work that's been done on income inequality and how much we want to share some of this prosperity with people that weren't participating for the past 10 years, is that really something to be worried about if wage pressure picks up?
If wage pressure really picked up and we were doing more than compensating for several years of lousy wage growth that was less than productivity growth, yes, then it would be something to worry about. But on my list of worries, that's very low. It's been remarkable how slow wages have been to react. The unemployment rate is now 3.7%, and wages are just barely, you can barely see them on the meter going up.
When we hear of all these places that people are stealing employees and people that don't like the job they're in, they're not afraid to quit anymore because they can get a job that they want. Why aren't we seeing it?
I think it's a great question. I'm not sure we really know the answer. There's some theories
participation rate, maybe,
that the employers just have a lot of bargaining power versus workers because they can outsource. Maybe it's the decline of unions. One thing that's really interesting is wages are going up faster for the very least paid employees than for people in the middle. Maybe because of the minimum wage going up in some states, or maybe because employers really are finding that they need to pay a little more, $8.50, $9.50, $10.50. Amazon's raising wages to $15 to get the lowest skilled workers to come to work.
So we got to go, but in your view, will we hit 4% next year?
I think it's unlikely, but I bet 3.75.